Nigel Farage is back, and this time his target isn't Brussels, it's the Bank of England. He's calling its officials dinosaur bureaucrats who are choking off British innovation by putting strict limits on how much crypto people can own. Now, this comes after the bank announced a plan to cap stablecoin holdings at £20,000 for individuals and £10 million for businesses. Now, supporters are saying that stablecoins are the future of payments. The Bank of England is saying that they're a threat to financial stability. Farage, well, he's saying that Britain is losing ground. So who's right here? Well, let's dig into the details because this story is about more than crypto. It's actually about Britain's financial future and who gets to control it. So before we get into the politics, let's clear something up. What exactly are stablecoins? Well, you can think of them as the middle ground between traditional money and cryptocurrencies. You know, Bitcoin is volatile, it can swing 10% in a day easily, but stablecoins are pegged to traditional currencies like the US dollar or British pound. And so if you own 1 USDT, that's supposed to equal $1. And if you hold 1 GBP backed stablecoin, that's supposed to equal £1. And so the point here is that they're meant to be boring or stable and useful for payments. So that's why they've exploded in popularity. And now the global stablecoin market is now worth nearly $300 billion, with giants like Tether and Circle dominating. And they're already used in crypto trading, things like remittances, and increasingly day-to-day transactions, but with growth comes regulation, and that's where the fight begins. Now, this week, the Bank of England set out proposals to cap how much stablecoin people and businesses can own. Individuals are supposedly only allowed to own £20,000 as their limit, and businesses have a £10 million limit. Why? Well, because the bank fears that if too much money flows into stablecoins, it could weaken the traditional banking system. And so here's their worry. Right now, banks rely on customer deposits to fund loans, and if people move thousands or millions into crypto wallets, then banks lose that funding, and that can hurt lending, it can squeeze liquidity, and make the system less stable. So from the bank's perspective, this is about protection, protection of banks, protection of deposits, and protection of the economy. But a lot of people are saying that this is overkill and that it sends a terrible message to innovators. Now, Nigel Farage has wasted no time. He wrote in the Telegraph basically blasting the Bank of England for being openly hostile to innovators, arguing that Britain has a golden opportunity to lead in digital finance. And instead, unelected bureaucrats are imposing limits that push investment offshore. And by doing so, they're actually choking off British competitiveness. And he argued that what the bank announced is not some sort of minor technical tweak. It's another example of unelected bureaucrats doing the most foolish thing possible and choking off British innovation and competitiveness. Farage also warned that the move could hurt demand for gilts, which are basically UK government bonds, because restricting stablecoins reduces demand for UK assets overall. And his punchline really was that Britain is losing ground. Now, this is classic Farage because he frames the establishment as out of touch. He then highlights the global race and positions himself as the voice of disruption. But, here's where things get messy because even the government itself is divided. You've got Rachel Reeves, who is the Chancellor. She's saying that she wants the UK to be a hub for crypto, that she sees fintech and digital assets as part of the country's growth strategy. Meanwhile, Andrew Bailey, the bank's governor, is deeply sceptical. He's told MPs that he isn't convinced stablecoins have a strong use case at all. And I think his exact words were, "I need a lot of convincing that the use case was made." So we've got a standoff. On one side, politicians are trying to attract innovation and capital. On the other, central bankers are focused on stability and risk control. And this tension has been simmering for years. If you remember Brexit's promise of a nimble, global, competitive Britain, well, a lot of people are saying that this is now the opposite. This is heavy-handed regulation that is going to scare entrepreneurs away. And if we just look abroad, the Europeans have MiCA, which is basically a full framework for crypto and stablecoins that's now coming into force. So companies know the rules and can plan ahead. The US is debating, but stablecoin bills are moving through Congress, and states like New York are already regulating them. In Asia and the Middle East, you've got places like Singapore and Dubai that are going all in, trying to basically become the global crypto hub. So when Britain caps stablecoins, people are kind of saying that they're sending the message, don't build here, build somewhere else. And that's why crypto groups and payment firms have lined up to attack the bank's plan, warning that it will leave London lagging behind. And then there's the digital pound, which is the UK's CBDC, or central bank digital currency project. The bank says that it's exploring whether to launch one, but Farage is firmly against it. He says that a CBDC would give the state unprecedented control over money, turning the Bank of England into Big Brother. And in his words, a digital pound would run directly by the state, would hand unprecedented control over our money to the Bank of England, and create the very opposite of the open, competitive financial system that we need. So for him, the choice is clear. Let crypto grow, but keep the state out of our wallets. So here's the big question. Is the Bank of England right to be cautious, putting stability first, even if it means slowing down innovation? Or is Nigel Farage right? Are we letting bureaucrats hold Britain back while the rest of the world races ahead? Because make no mistake, this isn't about crypto. It's about who controls money in the future. Unelected central bankers or innovators and markets. I want to hear your thoughts. Should the UK put limits on stablecoins or open the door to digital assets with no caps at all? Drop your answers in the comments, and if you enjoyed this breakdown, don't forget to like, subscribe and hit the bell for more deep dives into where regulation meets revolution. Thanks for watching, thanks for listening, and I'll see you in the next one.